Okay, and we're live. Hello, everyone, and welcome to our latest Lodgify webinar. I'm Mikkel. I'm a content marketing specialist here at Lodgify, and I have here with me today Corey Reid, the Vice President of Growth at Clearing, and Chris Luebbers, who is the owner of vacation rental property Lake Oasis Rentals and a property manager. And today we're going to be talking about navigating accounting for new and growing property managers. So thank you, Chris and Corey, for being here with me. Really excited to have you. And thanks to everyone for attending. We've got lots of helpful details to share with you all today. So yeah, we're excited to get started and let's dive in. Okay, so let's briefly go over the webinar structure just so everybody knows what to expect. I'll start with a few housekeeping notes, just some things for everyone to keep in mind, after which I'll let Corey and Chris introduce themselves. At that point, I will briefly introduce Lodgify for anyone who's not familiar with us yet. And then we will get into the meat of the presentation with Corey's presentation on insights, best practices, and infrastructural considerations for property managers navigating accounting. At that point, we'll turn to Chris. We've got some questions for Chris to get the property manager point of view on these same issues. And then, as always, we will end with a Q&A session with questions from you all. So yeah, if you've got any questions already, or if anything occurs to you throughout the webinar, please go ahead and include them in the chat right there at the right side of your screen. And we'll do our best to get to your questions at the end of the webinar. Okay, so those housekeeping notes I mentioned. Please keep in mind, everyone, that you are muted, so we cannot hear you. But we can see the chat. So again, if you have any questions or comments, please go ahead and include those in the chat. Now, if you can't hear us, that is an issue. So please try unmuting your speaker and turning up your audio. Usually one of those two solutions fixes that problem. And then since we get this question a lot, yes, the webinar is being recorded. And yes, we'll be sending out the recording tomorrow. So if you've got to jump off early for some reason, or you missed something, or you want to revisit any of these points at a later date, you will have the recording to do so. Okay, so now we can meet our speakers. Corey, do you want to start by introducing yourself and giving a little bit of background on what Clearing does?
Sure, yeah, absolutely. So I'm Corey, I'm VP of Growth at Clearing. I've been in the space for around 5 years now. I actually come from more of a traditional property management software background, but seen the gap and knew there was a gap here and I'm very interested in kind of financial aspects of businesses and the data associated with it. So I, joined Clearing early on before I even went to market and have been working with them for close to 2 years now and just seeing the explosive growth due to the gap that we're filling. Really, our goal is to help property managers close their books faster than ever. And we're doing that with some dedicated software specifically to short-term rentals.
Awesome. Thank you, Corey. Thanks again for being here with us. We're excited to have you. Now, Chris, you want to introduce yourself?
Yeah, so my name's Chris Luebbers. I'm relatively new to the property management space. My family and I have owned properties across the U.S. in different markets, and saw in the market that we were going into that we didn't have any good solutions for a property manager, like we had in some of our other homes. So we took the dive and tried to tackle some of the bigger players, and then this is how we got introduced to Lodgify and to Corey with Clearing is how do we integrate and then use those tools to offer the same level of service that these bigger players are offering, with all obviously giving them the touch and personal service that we offer.
Amazing. Great. Thanks for being here with us, Chris.
Thanks.
Okay. Now, I know we've got a lot of Lodgify customers here with us today, but just for those of you who don't know what Lodgify is, or maybe just getting to know us, I do want to briefly introduce us. So for you all, Lodgify is the all-in-one vacation rental software that empowers owners and property managers to easily create their own bookable website and accept direct bookings. So hosts and property managers can use Lodgify to manage all their reservations and guest communications from one centralized platform. You can also use our channel manager to sync your listings and calendars with external channels like Airbnb, Vrbo, Booking.com, and Google Vacation Rentals. Now, we also offer a marketplace with integrations with over 30 third-party apps from a wide array of categories. So this includes things like guest experience, dynamic pricing, cleaning and turnover, smart home automation, and of course, accounting. Now, Lodgify does offer some accounting capabilities, for example, owner statements, and we're soon releasing guest invoices. But for more advanced accounting needs, we integrate with partners like Clearing, just to make sure all of your guys' needs are covered. Okay, now last slide from me before we get into what everyone is really here for. As of yesterday, Lodgify's Black Friday deal is on. So right now, new customers can get Lodgify at 50% off, plus 6 months of Lodgify dynamic pricing free of charge. So this is specifically for yearly and bi-yearly subscriptions to our ultimate and professional plans. And it's definitely the best deal that we offer all year. So if you've been thinking about trying Lodgify, now's a great time to do so. You can learn more about the deal using the QR code in the right corner of this screen. Just scan that on your phone. And if you feel like you need to learn more about Lodgify before signing up, we do offer free demo calls. And you can book your free demo call using the button you should see at the bottom of your screen that says book a Lodgify demo call. And that is it from me. I will turn it over to you, Corey, for your presentation.
Yeah, sounds good. So I'm going to share my screen here. We'll make sure that I got the presentation up. And I'm just going to ask for confirmation, Mikhail, that you can see my screen okay?
Perfect.
Awesome. So I am going to be talking today mainly about navigating accounting. And really, when I talk about accounting, there's a lot of complexities in this short-term rental space. I think just even looking through some of the questions and chat right now, it's a complex topic. Specifically today, we're going to be talking mainly about new and growing property managers. So, I mean, maybe you are just getting into the space, or maybe you're taking that first jump from like managing your own properties to then managing for other people. And I mean, that jump itself is going to come with a lot of changes in your processes, and it's a lot more particular on kind of how you have to be managing the accounting. And so today we'll talk about insights, best practices, infrastructural considerations. But to back up a little bit, I will just introduce Clearing again. So Clearing is built to be a short-term rental specific accounting software. So we do things that extend beyond maybe the traditional PMS accounting solution to be able to allow you to provide more specific tailored accounting filings and kind of reporting for your specific business in the short-term rental space. And so we've been around for around 2 years. We've grown very, very quickly. We partner with people like Lodgify to be able to do what we do. And the one thing I'll say, just a caveat before we kind of dive too much into the content, would be that currently we are only operating in the United States and Canada. That being said, we will be growing to international places in the new year. So 2025, we have kind of earmarked for that. And that will be when we can take on, more clients across the globe. So if you are watching, you're from a different country than Canada or United States, this is something that's coming. So just keep that in mind. If you do reach out, we're happy to put you on the wait list and reach out to you as soon as that's available. It will be a bit of a tiered approach, but for today, this is mainly going to be focused on, new and growing property managers. It's a general topic, and we're going to try to keep it really educational and kind of avoid a pitch of a product, because we want to make, our goal is to educate and to help property managers navigating this, because it is just so complex. And in turn, we then have a solution that we can offer to help even further. But today it's really focused on, education and helping you navigate this kind of jump. So let's talk about it though, right? So let's talk about the key accounting challenges for property management companies. That PMC means property management companies. And really there's a lot, because the first thing and foremost we hear about is just the complications with all your different online travel agencies, OTAs, like Airbnb, Vrbo, Booking. Now the complication there really is that there's no standardization. So you have things like Airbnb that are going to pay you out on check-in, and they might even remit certain taxes for you if you're in a specific state. And then you have a Vrbo or a Booking where if you're using a payment processor, they're going to, pay out on reservation, and then a few days passes, and then you're going to have this money deposited into your account. And now you're dealing with like kind of two different dates when money's hitting your bank account for bookings that are handled. Like typically these bookings are very similar. They're happening in the future. All this money is coming in different ways. They're coming in as bulk payments, and you can't get that split to happen how you want it to in QuickBooks without having to do some manual work. And then there's also just that whole idea of the complexities around the integrations and the accuracy of the data as it pushes into your bank account, and actually verifying how much money is in that bank account compared to what your actual booking details are saying. And so with all these complications, we kind of disconnect from all that and do things in our software and kind of standardize things as best as possible. But that's just one of the complications. You start digging into other things and talking about new and growing property managers. You're dealing with owners. If you're taking that jump from a property manager that's just dealing with their own owned assets, and then you're now starting to deal with other people's assets, there's a big change that happens there. And so owners' needs and interests become a stakeholder of your business, and dealing with them can vary depending on what they want. And so we typically and often see people that are doing multiple different short-term rental models for property management, in the same business. So you have some that you're co-hosting, some that you're doing trust accounting with, some that you're, are Airbnb arbitrage, and all these different complexities have different needs from an accounting perspective. And so centralizing it all and managing it all can be a really big mess if you don't have designated tools that can support all those models. There's also just really, a ton of different variety in the fiscal requirements in different jurisdictions. So I know US and Canada quite well, but even within the United States, there's, different states are requiring different things from a property management perspective. Some states you have to be a broker. Some states you are able to just do it. Some states mandate trust accounting if you're going to be managing other people's money. So much variety, even down to the expense level and how you can deal with expenses in your business. So from that variety perspective, a one-size-fits-all approach doesn't really work in accounting in the short-term rental space. You have your whole idea around expense billing and requirements associated with your expenses, and the responsibility of these expenses may vary depending on the different owners you're working with. Again, just different needs for different people and stakeholders in this business type, and it really complicates things. So even down to like the commission calculations, you may have different commission calculations for each owner that you're working with, and some of the different commission might only be over certain date ranges, and then it might change. And so with all these different navigational parts that are just varying across the board, you need a system that's going to help you kind of manage all that. And especially as you're jumping from like managing my own properties, which does come as a little bit, I don't want to say easier, but it's all assets that you own. So it's a little bit less risky to now dealing with other people's assets. Now you have some different reporting and requirements for that. And so first and foremost, kind of the easiest way to ensure like an easy property management experience, I would say, and it's not always possible. And I understand that there's like requirements that you get pressure from all these different owners for different types of relationships. But if you could standardize your processes, that's going to be the easiest ways to scale. And when I talk about standardization, I really mean like your model of how you're doing your property management. And I can jump into that now around like kind of the common operating models for short-term rentals. And so there's really these four that we generally see people coming to us to talk about. And the first one is, you're doing professional property management. So, but defining professional property management, I have it on here as trust accounting. And that's really when you're collecting all the money from all the OTA payouts or your direct booking payouts or your Stripe payouts or your Airbnb payouts. You're collecting that money, and then you're going to pay your owners out. That's like what we see most commonly, I think. But in general, that's one model that we deal with. There's also the co-hosting model where you're not necessarily collecting all that money. A lot of that money is going directly to that owner, and then you're going to need a system to invoice them so that you can get paid, for those management fees that you're doing, and also paid back for certain expenses. And then we have, lesser common model, but definitely, in the space and people are doing it. It's Airbnb arbitrage. And what that really is that you secure a lease and you're paying monthly lease payments, but then you're able to go out and rent that out to different people through short-term rental websites like Airbnb, OTAs, and those things. So it's a less common thing because I think there's many cities kind of are pushing against it, but in the same kind of breath, it is quite lucrative, and a lot of people are starting to try to do that and secure more and more leases to be able to short-term rent them out. It also involves a lot less cash to kind of get involved in that model. And then the last one is kind of, this is very common as well, but it's owner operators. So people that own their own properties, and then they're going out and they're renting them out to other people as a short-term rental. And so that one in and of itself has completely different requirements, because now you're dealing with often a lot more long-term liabilities. Often you're dealing with mortgages, and there's just different requirements to all four of these different models. And so when you're thinking about accounting and you're just getting into property management, When I talk about standardizing, I'm talking really about understanding in your jurisdiction what is the allowed, and then going from there and deciding which one of these models you really want to focus on. And I know that's a challenge because sometimes we meet people that are doing trust accounting for 4 owners. They have 2 that they're co-hosting, and they also have an Airbnb arbitrage. And trying to do all of that and all the different accounting requirements associated with that, specifically from a financial reporting perspective, in one software, it can be very cumbersome if you aren't using a tool that's designed specifically for short-term rentals and the needs of short-term rentals. So I'm going to kind of go through kind of the 2 main ones that we see most. And one of them is that property management, professional property management I talked about, where you are doing trust accounting. When I talk about trust accounting, I don't mean like a specific trust account. That's a bank account that's a trust account is different than trust accounting. Trust accounting is the process around managing that trust account, so you can make sure things are balanced. You make sure you know how much money you have in prepaid deposits. You have the financial reporting that shows that it's reconciled. These types of trust accounting practices are different than like what a trust account specifically is. But people that are doing professional property management, it really is something you should consider doing if you're dealing with other people's money, because it puts you at less risk. Specifically if you are collecting that money and then paying your owners out and you don't know exactly what money's been received and what hasn't, it can be a lot of risk associated with different forms of financial fraud. So what is trust accounting? Well, trust accounting is what I've kind of said a few times now, but property manager holds funds on behalf of stakeholders, and then they separate the operating revenue from the company as one account, and then they have a different account for the guest deposits, essentially. And so there really are those 2 main types of accounts in this system. One of them are a trust account. And the interesting thing in the United States is that like some states actually require you to open a trust account. Some states don't really care, and they say it can be a checkings account. You just have to have it segmented from your operating account. Really, when it comes down to specific jurisdictional questions, the best people to reach out to are your real estate commission or your tax authorities to really understand, or even a CPA should be able to help you in your state, but to really understand what you're responsible for. Because does it need to be a trust account? There's even states where it has to be a trust account that is opened up physically in their state. So there's a lot of different rules. And again, it goes back to that really complicated mess around what do I do as a new person coming into this space, trying to understand all these different components and what I should be doing from a banking infrastructural perspective. And so if you're doing professional property management, I would say the first thing you can do to make your life easier would be to open 2 accounts. One's going to be your operating account, and that will be like company expenses. The other is going to be your booking deposit. So any money coming from Airbnb, Vrbo, your direct booking website, just right off the bat, separate that out. That way, anything in there, because basically that money is a liability to your business until you pay them their revenue and pay yourself your commission. So that needs to be kept separate from the operating account, because during COVID, for example, a lot of people were canceling bookings, and then those canceled bookings weren't getting paid back because all the money was kind of combined in one account, and they weren't really keeping track of what's a business expense, what's a payment I have to make back to my owner. And so it put a lot of businesses at a lot of risk because they didn't have the money to go pay back on these canceled accounts, because they were spending money in elsewhere with money from owners that wasn't actually related to the business. So just separating those 2 accounts is going to drive a ton of efficiencies for your business, and it's going to remove a headache, essentially, because you'll know right off the bat that all that money in your trust account is related to your bookings, and then expenses happening through your operations account are going to be directly billable to the company. Now, there are kind of 2 different types of trust accounting, if I can, for lack of better words, I guess. And it really comes down to different states, again, in this component, because in some states there's like a strict policy, which means that if you're dealing with asset specific expenses, that money needs to be paid for out of your actual trust account. Now, other states allow for a more standard, and it's more common this way actually, where you can pay for certain expenses from the company's accounts and bill them back against your trust account to make sure you receive those expenses and get reimbursed on them. Now, I don't have all the answers around what state can do what. That's kind of your due diligence and your responsibility. But even if your state doesn't mandate, trust accounting at all, separating these 2 accounts up it's going to put you at a much better place when you start to go into doing your accounting, especially from the perspective of knowing what money you have in your bank account for what bookings and what money is for which owner. So there's really the two main accounts, and then there's a few optional accounts that we commonly see. So the first kind of account that we run into is the trust account. We talked about this, right? So this is where all the funds should go into a property kind of, your own account designated for those guest deposit funds. So payouts from OTAs, Airbnb, Stripe, you name it. Then here's your operating account, which is generally for the expenses of the property management business. But in some cases, in that standard policy, you may be able to make payments from this account for certain properties and then bill that back against your owner statement to reimburse yourself on that. The two other ones are optional. A lot of people just actually do this by creating a chart of accounts and managing the money through like a categorical kind of perspective. But some people, they just feel more comfortable when they move money into a specific account that's designated for something specifically, like a tax holding account, for example. So if you're collecting these taxes from the OTAs, like Verbo, they're paying you out because you're using a Stripe as a payment processor, and you're collecting lodging tax, some people will just go and move that money into a different account. And within clearing, you can actually create sub balances for this if you wanted to, and they are FDIC insured. So if you wanted to have all money being deposited and then put it into a different account to hold this set aside, so you have this tax holding account and the funds in there for when tax time comes, you can certainly set up infrastructure like that within our software. That's more on the fintech side of our software, I guess. And then the other account would be a reserve account. These are becoming more common. We do have the capabilities in the software to manage these as well, but it's really that whole idea of like holding certain funds set aside for unexpected or future expenses. So sometimes it'll be $500, $1,000, but you're keeping this money. And so when you're paying your owner out, you make sure that's topped up first. And so that's really like the four main accounts when it comes to trust accounting and professional property management. Co-hosting is obviously different, right? So co-hosting is more, and there's probably people on here that do both. And so I wanted to make sure we touched on, the requirements from a banking perspective and how co-hosting is ultimately different because you don't actually see a lot of that money until you actually invoice them. So typically speaking, you can get by with a less, kind of infrastructure around your banking. And really a lot of the times people are just operating out of an operating account and they're paying for certain expenses. You can create other accounts as well if you wanted to have designated accounts for designated purposes. But in general, these operation models are less complex, but there's also less specific tools that are built specifically for this space. So a lot of the times co-hosts we come across are trying to do, something from a co-hosting perspective in a software that's designed for property management. And it just makes it a little bit more challenging for them to be able to do so. And so within clearing, it doesn't really matter which model you follow. There's going to be a path for you. Still, there's a better, it's a better approach to standardize, because at the end of the day, if you standardize and scale with a standard process, it's going to make your life a million times easier, because as soon as you start accepting, that one Airbnb arbitrage or that one or two co-hosting models, there's going to be different stakeholders involved with different needs and different transparency around what you're actually doing as well. So co-hosting in general, the banking infrastructure is less complex, but there is a component of accounts receivable that is a little bit different than in the property management model. I mean, there's still accounts receivable in the property management model. Usually that's dealing with, the actual payouts from OTAs and making sure that that's reconciled against your booking data. But in the co-host model, you are physically billing somebody for your property management fee and collecting that money. Presents some risk. I mean, in general, you get to know your owners, you build strong relationships with them, you set some specific payment terms, and you should be good. But in general, tracking down invoices is a part of that kind of co-hosting model. And then there is, Airbnb arbitrage. You're paying a lease monthly. A lot of that is, that's a big part of the component of the accounting around Airbnb arbitrage, because you are going and you're paying this monthly lease, and then you have all these bookings, but you don't really have to report to anyone, because as long as you pay your lease, that's great. I mean, there's going to be financial reporting that happens for your accountant, but in terms of like stakeholders involved, it's really just you still, and that's similar in the owner operator model. So we won't dive too much into those, because businesses are set up in unique ways across the board. So if you're doing an owner operating model, sometimes we see people that are, they're also managing for other people and they're managing their own properties. So they just kind of set themselves up as an owner and treat it as if they were an owner, even though they are the owner of the property. There's unique models you can get into for all of that. But at the end of the day, you have a lot less risk, because all the money and all the assets are yours, unless you start to property manage, in which case you should adopt some sort of other model for how you're going to manage the accounting associated with it. And so, I mean, definitely the biggest thing that people coming to us struggle with is just transaction management in general, not even necessarily expense management, but transaction management, because, there's the first and foremost, there's the two main sources of data. You have your bank account and the transactions that actually hit your balances in your bank account. And then you have your property management software and the OTA payouts. So essentially, if they're syncing and it's direct integration, that's great because you can share a lot of that information. But in some cases where there's not direct syncs, then sometimes you even have a third component, which is the different data that's in the OTA versus the PMS. But in most cases, it really boils down to like your booking information and your bank account transactions. And so looking through this, expenses and revenues, right? Something as simple as an expense to a business is a, it's a deduction from the management, or it's a deduction from the financial statements related to the business. But what if that expense is actually reimbursable? You need a way, and typically people want it to be automated, to say, well, with this type of expense, so I'm actually going to bill my owner for that. So then on the owner statement, it's going to show up as negative. But even though it's an expense to the business, you need to have something that corrects that and makes it a revenue to the business because you're getting paid back from the owner. So in these scenarios, like being able to navigate all these different expenses, and another common challenge is really the splitting of expenses. Because what if you go on Amazon and you buy, a big bulk payment for 50 different properties, and then Amazon's just going to spit out an invoice for that, and you're going to have to go through and manually say kind of which one was for which property and which one was for which owner, and it becomes time consuming. And so within clearing, I mean, I won't talk too much about the specific product, but we do have tools around like mobile app that's going to allow you to take, upload those invoices or take pictures of those invoices and receipts, and it's going to use AI to parse through it and pull out the relevant information and then ask you questions specific to which property these different line items should go under. So at the point of that purchase, you can leverage tools like these expense management tools to be able to automate a lot of that in the process of, once you match it to that transaction, it's then going to be tied to that transaction, which will be tied to the owner statement, which will have a receipt there for that owner. When they're looking at it, it's super simple. You have that receipt, they know exactly what they paid for, and it's really transparent. There's also rule-based types automations where you can create different rule sets that'll say, like, if it's this type of expense and it's from this merchant, let's bill it to the owner, or let's bill it to the management company, but make it reimbursable so that it is an expense to the owner, and we're going to collect that money back. Or even like fees per booking. Let's say you collect a different amount in cleaning fee than you actually pay your cleaner. That disconnect needs to be adjusted for, and doing that every single time manually is going to be a big challenge. And so being able to build out rule sets, leverage some AI with our mobile app, and also more to come there as well with some of our integrations in the fintech space. It's really around creating as much automation as you can around these transactions so that your job becomes more of, let's log in and let's go through and reconcile things and make sure everything's accurate and create certain reports, but let's not spend so much time going through and actually doing all the bookkeeping ourselves. And there is still going to be bookkeeping. I mean, if you buy something with cash, you might have to make a journal entry, or maybe you take a picture of that receipt. But the big challenge here really is not necessarily the payment part. I mean, going and buying something is easy, but once you buy it, well, which property was that for? Which owner was that for? And also, is this reimbursable? And if it is, should it go to the trust side of the business or the operations side of the business? All of these questions come with a lot of complexity. So leveraging a tool that's specifically built for automation in the short-term rental space can be a big bonus to you once you get to that process of coming to the month's end. And we've heard things along the lines of like going from 40 hours to 8 hours kind of things per week at the end of the week. So these types of ideas are really being, coming to life through leveraging, designated tools within the short-term rental space for accounting. Specifically, our software is really focused on trust accounting, but we do support all those different models. And so reporting, right? I mean, reporting is also a challenge. I mean, at the end of the day, anytime you jump from managing for yourself to managing for other people, there's going to be an element of trying to figure out down to the unit economics of which asset is for which property. And so you have all these different transactions kind of coming in, and now how do we make sure that they're going to the right place? And so while you're doing your bank reconciliation, that's a big component of what we're going to do within the software. There's also your OTA reconciliation to make sure that the amount of money that's actually in your account equals the amount of money that's actually in that specific booking. But then at the end of the day, once you've gone through and you've done your month-end duties around, like whether that's a bookkeeper doing it, a VA doing it, an accountant doing it, we've seen it all in terms of models around that. That being said, once you need to generate these reports, it needs to be at a point of like, okay, well, let's generate a report and let's say it's for this specific asset, and then everything adapts based off that. Because if you're just generating, a standard P&L for your business, that's great maybe for one portion of your actual of your actual filings and accounting associated with it. But a lot of the times your accountant's going to actually want a P&L specific to that asset or specific to that owner. And then there's your owner and management statements. I mean, owner statements in general, there's a big component of expenses that often is very manual. And so being able to create automation and rules to tie those expenses to the statement with automation makes things a lot easier. And then management statements in general, oftentimes they're just overlooked, frankly, because a management statement isn't just your commission. It could also be a markup on an expense. It could also mean, some other expense or revenue that you're doing outside of your actual PMS or booking channel. Maybe it's something that was an upsell or something like that. Tax reporting, I have a slide dedicated to it because it is a mess in the short-term rental space. But in terms of specific reports to specific assets, that's really a big component of what clearing is going to do. And then there is invoicing in there if required. A lot of the times you can do invoicing in other places too. We do connect to bank accounts so we can see things that are happening in your bank account and compare it back to your booking data. But in general, when you get into the managing for multi-property financial reporting, the key takeaway here from an educational perspective would be to be very diligent in your bank reconciliations to make sure that you're matching specific expenses to specific sides of the business if you're doing trust accounting, so operations versus trust. Or if you're not doing trust accounting and you just want to make sure you're getting paid back for it, make sure you're putting it towards the right asset and homeowner so that when you do generate that summary statement or allocation reporting meaning, how much do I move to which account? You're going to be able to see that very, very simply by changing the filters to put it towards a specific asset. So once you've done your reconciliation from a banking perspective and you've gone through and confirmed all your transactions, and a lot of these are going to be fully automated, but there's going to be some that are new transactions that don't come through necessarily, or there's a lot of issues with Vrbo and Booking.com commission because they charge you a month after the month's end. So then now you're trying to reconcile that against owner statements that you've already created. So lots of complexity, but at the end of the day, once you get in and you start setting up a lot of this automation, it takes away a big chunk of that. Then you focus on the discrepancies, make sure that there is that balance in your reconciliation. And then from there, it's really just a few clicks to create a lot of these statements. So, and down to the owner asset level, once that kind of first phase of work is done. So I did say I had this navigating tax considerations and compliance. One thing I'll say here is that I've actually, in general, it's complex, right? Because Airbnb maybe is going to pay out some of the taxes and remit it on your behalf. If you're working with a payment processor, chances are they're going to be paying you all the taxes, and they just pay you the taxes in a lump sum. And so that lump sum doesn't really tell you much compared to what your municipality tax is, or what your federal tax is, or state tax, or resort tax, or you name it. There's many different taxes in many different jurisdictions. The first thing I'll say is, we are not specific, or me at least, I'm not a specific tax expert. So if you were to ask a question about okay, well, what is the tax rate in Cary municipality? That's not for me to know. That's something for you to go and find out. So you can talk to people like your real estate commission. They'll be able to help you with a lot of these different compliance needs, specifically tax authorities as well. And they'll be able to get you those amounts that you're going to need to be billing for on your actual booking, so that you have that money to cover it from a tax perspective. Now, something I also learned through dealing with a lot of our clients is that if you do call something a tax on your booking, it is a tax. So if you collect too much money in taxes, that additional money still has to go to a tax authority, or it has to go back to the guest. It's not money or revenue for you. So in a case that I heard about, they were collecting this extra money on accident, didn't even know about it, but they had all this extra tax that they were saying, oh, this is extra revenue, put it towards the business. They got hit with a big, big bill from the IRS, because as soon as you call something a tax, it's a tax. And so what our software can do to kind of help there is you set your rates, you set your amounts, you build out your tax structure. That money comes in from, say, Vrbo or Booking.com, and it's paying you out on taxes. We can create a ton of different rule sets to basically automate that split down for you, so that it goes from being a lump sum down to your individual components. And then we're working on integrations into different tools that can automatically file taxes for you. So right here, you'll see this is a by asset report. I didn't scroll down to the whole one, but this specific asset, once I have my automation set up, it's all coming in, being broken up, and then I'm presenting the credits, which are all the taxes that I've received, and I have to go and remit for my different owners. So stuff like this type of per asset financial allocations and kind of financial statements, these are really hard to do in a one-size-fits-all solution. And so there are I think one of the takeaways here, not necessarily even clearing, but there are tools out there specifically designed for the short-term rental space to help you with this stuff. So do your research and go out and figure out those tax rates, and then figure out exactly the process you're going to need to follow, and then come talk to somebody at clearing, and we're going to show you kind of how that happens with automation. At the end of the day, though, the biggest takeaway I think for me is that I want to make sure that you guys are talking to people in your state and understanding your tax requirements, because at the end of the day, it's different for every state. So if I were to sit here and tell you one specific thing, it might be very different in North Carolina compared to Tennessee, compared to California, right? So make sure that you're going out and doing that due diligence. And then just to kind of wrap things up, knowing that we're kind of shorter on time here. So risk management, right? This is a really important topic. So one of the biggest things that people struggle with in the property management space when they're doing professional property management is at any given time, knowing exactly what is in that trust account. So think about this scenario where you get all these bookings and you're just believing blind truth that these money deposits into your account reconcile directly with what your booking says. So what's on your booking is equal to exactly the amount that's hitting your bank account. In that scenario, great, everything's fine. Now that's not always the case. Sometimes Stripe takes a while to pay out. Sometimes there's inaccuracies in that push from the OTA to the PMS. Sometimes there's money that just gets missed in certain scenarios. There are discrepancies there, and we have a really easy way to keep track of what's hitting bank account compared to your booking. Sometimes there's prepaid deposit, right? Like this is happening for a booking way down the line, and we got $500 in here for that booking, but it's not even going to happen for another 6 months. Airbnb seems to be nice because it does pay out on check-in, but a lot of the other ones don't. So that money, specifically not knowing exactly how much money you have in your bank account and being able to say, well, it 100% matches what my booking details say, can cause some really big problems. And one problem, for example, would be like, let's say that you were just believing on blind truth that the money hitting your bank account is the right amount of money. And then now you have this owner statement that you generate and you're saying, oh, I owe Sean, for example, $6,000, right? Well, in my trust account right now, Sean only has $4,200. So we can see this. We can pull a report that says from this day forward, how much money is in that account for each of my different owners and from which channels. Now, if you didn't have access to a tool like this and you just go out and pay Sean $6,000, that discrepancy of $4,000 to $6,000 is coming from somebody else. You're robbing Peter to pay Paul. It's a form of financial fraud. Now, of course, you can recover from this from doing different types of filing, but and kind of adjusting your numbers to make it make sense. But that wouldn't be recommended. What would be recommended would be to actually be able to track exactly how much money is landing in that bank account. And if you see that money and it's inaccurate, well, now you can go figure out why. And then the other thing you could do is by really easily being able to see that is reconciled, you feel a lot more confident going to pay those owners out because you know that money's there. And so you're not going to be taking money from, say, Labo Properties to pay for Sean's owner payment. And so definitely, really meticulously, whether you use software or not, keep track of those bookings. When a booking data comes in, compare that to what you've seen land in your bank account and make sure it's accurate. Because if it's not, you're setting yourself up for quite a bit of risk associated with not knowing what's in that account and how you're paying out. Now, that's obviously professional property management. But that being said, with co-hosts, you do still have some risk elements there as well. Now, bigger risk elements there, just like dealing with bad owners, I think is a big risk, because if you have clearly defined payment terms, but they're going over the timeline of those payment terms, or you're not seeing that money come in, that's an alarming risk to your business because you're spending money that you haven't collected yet, essentially, as well. It's not the same type of risk because this isn't a liability to your business like the different owner asset money is, because if you're dealing with other people's money, you have a different responsibility to those people. And specifically in different states, it's going to vary. Some states, like I said, make you open that trust account in their state. Others are okay with you just using a check-ins account. That's where your due diligence and kind of research comes in. But in general, this risk right here made a lot of people in a lot of trouble during COVID because they were spending money on repairs and other things like that, cancellations, and then they were pulling money from different places because they didn't have a clear picture of what was in that trust account looking forward. And that's another really important, aspect of trust accounting in the short-term rental space. And so just to kind of wrap things up, I'm happy to chat with anybody who who wants to chat this kind of stuff. It's something that I'm super passionate about. I don't think anybody really gets into this business in the short-term rental space being like, I love accounting, I want to just spend my time doing it. But in general, once you start to see the picture of all the different challenges property managers are facing, it does become really interesting from a software vendor perspective to be able to work with these people and help them close their books faster than ever. And so really that's our goal at Clearing, is to just kind of help property managers navigate this mess. Because at the end of the day, until there's better standardization across the industry, it's going to be a mess. You're going to have Vrbo paying out differently than Airbnb. You're going to have different owners wanting different types of arrangements. You're going to have different ways that you're allowed to pay expenses. At the end of the day, the biggest takeaway, I think, is choose a model and standardize around it if you can. If you can't, maybe your friend comes to you and says, hey, I see you are now, managing some properties. Can you manage mine? But I want to receive all the money, and I want to you can be like a co-host. I want that listing in case I decide to go do it later on. Those situations come up. So as best as you can, standardize around a model, and it's going to really help you scale, especially as you start taking on other people's properties. Leveraging automation and AI where applicable. I'm not going to dive into all the different automations and AI we have in Clearing right now, but absolutely reach out and fill out a form if you want to chat about it. We're doing a lot there, and a lot of things around like being able to flag certain discrepancies and being able to flag certain duplicate charges and stuff like that, so that you don't miss that window of a threshold that you have to actually do a chargeback or something along those lines. Leverage open banking and fintech. There's a ton of stuff happening in this space right now. Get into it, understand it, and learn about it. It's really fantastic, it's very fascinating to see kind of how fast this piece is growing. I was just at VRMA International, and there's more and more tech vendors getting in the space around fintech, and we're doing some cool stuff there as well. Check out companies like Ramp for virtual credit cards or even physical credit cards. A lot of people that are small and new to the space, it actually is a really easy way to streamline your accounting. If you just go open up individual, even virtual or physical cards for each of your properties. Now that doesn't necessarily scale well, because if they're all physical cards and you have 50 properties, now you're carrying around 50, physical credit cards. That's not going to scale well. But at the beginning, you can go to a company like Ramp who offers these for free in getting started, and you can have like a virtual card for your 3 different properties. And then when you're buying things on Amazon, choose the right payment method. All of a sudden you can create a rule that matches and you never have to bookkeep that transaction again for tying it to the right asset. So from a small perspective, it makes sense. We can do this at a larger scale with just one credit card based on some of the functionality that we have to be able to create rule sets to automate stuff and break things down further. But a simple method that a lot of people are moving towards is just generating a credit card for each property and paying for things in that way. There's a lot more from a fintech perspective that we can do and that you can do with the system, but we don't need to go too far into that. I think the biggest kind of last thing I'll say is understand your legal responsibility and seek help from experts. Now, legal responsibilities, I've talked to people that have spent so much time trying to figure out and get a real clear picture of this and haven't been able to. Ultimately, the best place that we've found to tell people where they should go to find this stuff out is your real estate commission and tax authorities. They're going to be the ones that have a better idea around the short-term rental space. Now, the reality is 90% of the time they go there and they're talking about property management, and the people that they're dealing with are saying, they're just thinking right off the bat long-term, because it's long-term is already kind of more standardized. You have to do trust accounting with long-term rentals. Within the short-term rental space, I feel like this is following suit, and we're definitely seeing more and more stuff coming down the lines. So get in front of it and start talking with these people, reach out to them for the advice. And then if you do need help from an expert, just know that our software company has gone a different direction than a lot of the other players in this space for this perspective, where a lot of what we do is we don't actually do monthly bookkeeping services. We work with around 15 to 20 different CPA firms and accounting firms and even trust management firms, and they're using our software behind the scenes for all their trust accounting and kind of STR accounting needs. So by doing so, we can tell you, like, if you come to us and you think, oh, this is a great tool, but I don't want to be the one that has to do anything in it. I hate accounting. We can definitely recommend you to people that are experts in this space. They're solely specifically focused on short-term rentals, and they're using our software to kind of do their accounting. So not only should that provide some assurances to the ability of our software, but also just know that we're not going out there and trying to do everything. We're focusing on building tech that can help you scale, and we have a ton of experts that we can connect you with to be able to help you kind of grow your business through these challenges. So yeah, hopefully that was all kind of clear. we only have a certain amount of time here, so can't really dive into all the nuts and bolts of it all. But if you do want to have a conversation about this, come to our website. Let's have a chat. Right now, we are focused solely on the US and Canadian markets. But like I said, in 2025, we are going to be expanding that. So if you want to get ahead of it and join the wait list, we can certainly keep you updated on when that will happen. And lastly, just thank you, Lodgify. I mean, I think we have a really strong partnership. I always enjoy doing these types of things with Lodgify, and really appreciate everyone joining today. I'll just note, don't go to .com. We're on a .co. So if you're looking for clearing, that's where you'll find us.
Awesome. Thank you so much, Corey. This is obviously a super complex topic, but you've done a great job of bringing it down into easy to understand parts, even for those of us who really, for me at least, don't know much about accounting. So thank you. Super clear. And we've got some great questions for you in the chat, which we'll get to at the end of the webinar. Just another reminder to everybody, any general accounting related questions for Corey, please do put them in the chat and we'll get to them in a few minutes here. Now we want to switch gears a little bit and talk to Chris. Chris, you obviously are living these issues, right, as a new property manager. So really curious to hear some of your insights.
Yeah. So we ran into the same, problem that everyone. I've been watching the chat, and it's pretty congruent with the things that we, recognize very early on is how do we navigate keeping track of all this in a way that doesn't make us pull our hair out? There's as those different things come in, and one thing that you brought up, Corey, that I thought was a really good point was when you get these deposits for, say, a snowbird or a longer term rental that's coming in, and they're putting $2,000 down, where's that go? And these variables, they became very difficult and very complex very quickly. So we, obviously did our research, and that's when we got connected with Corey and Clearing. And, it gives us enough tools to be able to identify what transactions are whose, do so in a very efficient, quick manner, and then be able to have these owners confident that they're getting paid out correctly. And then, of course, that goes back to our customer service and reviews and things like that. And obviously, happy owners with getting correct statements typically are more apt to say good things about you, and then that helps grow, the business from there. So I'd say that from our standpoint, we jumped on this fairly quickly. We're actually fairly small still, but we did so because we knew that as we grew, it's a lot easier to do so the right way than have to, go back and change things with 10 owners, 15 owners, versus, I think we're right now at 5. So it's a lot easier to do that now than when we get to the future and things are even more robust.
Absolutely. Yeah. No, thanks for that background. I wanted to hear a little bit about where you're coming from, just because I'm sure you are kind of in a similar position as a lot of the attendees here. So it's great to hear. I'm curious about, like, as you started transitioning to managing other people's assets, if you came across anything that surprised you or challenged you specifically in terms of accounting.
Well, in terms of accounting, the challenge really lies in making sure that everything is correct. And, we do. So we're kind of more a boutique style is kind of our focus. And in doing so, we're going in and purchasing, last week, I think we purchased 3 fake trees for a living room, but the point being is, now that's on a company credit card, and how do we identify whose fake trees these are, and how do we charge them correctly and make sure it's done in a way that, they have access to that. They can see that statement. They know, because a month from now, they're probably going to forget that they wanted us to do that. And this puts it all in a nice, and, they have their own portal. They can go in, they can see these things, and then, really make it to where it's completely transparent. Because I think that's really our big thing is they want to know. And that goes across the board on any short-term rental owner. This is their home. And they really, there's a lot of investment, even more so than in some other businesses. I'm in a few other businesses, but I've noticed with short-term rentals in particular, they want complete transparency. They want to know exactly what's going on, who's in that home. They want to know all these details. And with using Clearing and Lodgify, we're able to kind of bring light to exactly what accounting is going on, where those funds are coming from, and in some cases where they're going. So I think that's a great tool for us to be able to present that in a way that they understand what's going on.
That's great to hear. And I'm guessing then you eliminate the back and forth of, oh, what is this charge? Oh, that was when you asked me to go buy the tree. And that, which could be I don't know how long of a conversation, you just have it there front and center, right?
Yeah, that obviously our goal with anything is to minimize our time spent in redundancy and improve efficiency. So any tool that accomplishes that is well worth its time.
For sure. Kind of speaking to that, are there any other tools or strategies or processes that have been helpful as you've navigated this transition?
So, I mean, obviously, in our case, we're still in that growing phase. So really, we've kind of implemented, the tech piece was something we wanted to do early on, and that's why we did that. Is because my partner and he came from Vacasa, so we had that background of these owners really expecting these robust tools and this ability to get in. They want to, on a Thursday afternoon, they want to be able to log in and see, and kind of review that statement and have a place where that's at and things like that. So, we implemented those things early on. And then, we use some other applications that are through your app store, such as like Turno, to leverage getting, good cleaners and unfortunately sometimes getting options of cleaners that are better than the ones we have because we run into issues and stuff. But that's another great application that we've used, is trying to make sure that we don't end up in a situation where we don't have the tools necessary to complete the job, and we have an owner calling us angry because their house wasn't turned over, they're coming down for the weekend and it's not clean, or whatever that case may be. So I'd say the big thing is we wanted to implement tech early on, and then we knew that the customer service could follow the rhetoric once we had those pieces in place.
Awesome. Yeah, it's always good to hear people putting our marketplace integrations to work. Okay, next question. Can you share an example of a complex accounting issue you've come across while managing client assets, and maybe how you resolved it, or if it's ongoing, what your plan is?
Well, we there's a good instance that just happened actually this weekend where we had to move somebody from one property to another, and that those funds had to go to that second property. Now it happened so late in the game, we had to do it manually and do so with the current booking still being technically locked to Airbnb on that first property. So in doing so, we were able to, the nice part is with clearing, and what Corey, kind of went through is, they do a good job of identifying where these things are supposed to be, putting them in the portal, and making it really streamlined to where we don't have to do those things. But then we can have the option of going in and saying, okay, we know this problem happened, we have to manually adjust this problem, and we still have that option to do so. So that's nice, is that we're going through and I kind of think of it like we are just auditing that file at that point, and ensuring everything was placed in the correct spot. And then in this case, we're able to move it to somewhere where we, unfortunately, software is not going to catch that. That happened behind the scenes, so it's something we got in and manually moved around.
Okay, nice. So it's good to hear it's not so automated that you can't go in and make adjustments as necessary.
Yeah.
Okay. Last question for you before we move on to the Q&A session from the audience. Wondering if you have any advice for property managers making the transition from managing their own properties to other people's assets, and then specifically any advice for those who are managing multi-property or multi-owner relationships.
Well, I don't know if I'm the expert on those fully, but that being said, I think the big thing, and this is something I've carried across multiple industries now, is I think honesty and transparency, which is what we're able to provide with these tools, goes a long way. And we've ran into a few situations already where there was an honest mistake. There's something that didn't happen that, or should have happened that didn't happen. One of the ways. But essentially, we were able to go in there and make it right and fix the problem. And I think that's my best advice is to focus on getting yourself in a position where tech and the details are not something that encumbers you, and you're able to focus on the high level problems and be present and ready when they occur to handle those the most accurately and correctly that you can. And that's how we've onboarded a few people, and frankly, in doing so, the word of mouth gets spread by doing those things. And if we're inundated in layers of accounting and software problems and things like that, then we're stressed out and we're not ready to fully prepared to handle those externalities as they occur, because we all know they will. So I think if I had to give some piece of advice, I think that'd be it.
Great advice. I'm sure that will be very helpful for lots of people here who are similarly in the weeds with their tech stack, right?
Yeah.
Awesome. Thanks for your answers. Now we can move over to the Q&A session from our audience. We've got some great questions in the chat. So yeah, let's take a look and see what we want to start with. We'll start with this easy one. I know you've mentioned this a couple times, Corey, but it keeps coming up in the chat. Not only is clearing available in Europe, but also what are your guys' expansion plans?
Yeah, so we're not currently in Europe. Our expansion plan as of now is that we're looking into 2025 to start expanding. It will be a tier-based approach, but there's multiple countries in the EU that are on that, including the UK, Spain, France, and a few other ones as well. But those are, it's really coming down to capacity and how fast we want to grow, internationally. I think in general, we have a massive wait list of people that are interested in, learning about our software and using our software overseas. Places like Australia mandate trust accounting for short-term rentals. So it is a huge opportunity for us, and we are definitely coming. It's a matter of, it's not a matter of if, it's a matter of when. And I think just watch, if you join our new, if you go to our website and put your email in the sign up form, we will put you on a wait list, and we will be able to give you that, better specific dates for that as well.
Awesome. Thank you. And you shared the link earlier for where they can get on the wait list. I'll be sure to include that in our recap tomorrow so that people have it handy.
Thank you.
Okay, next question. Does clearing replace if one is using QuickBooks, or is this to collaborate with and have in addition to QuickBooks?
It's a good question. It depends on the model. So if you were to ask me this in 3 years, our goal is to be a complete standalone accounting software for the short-term rental space. So that will be both corporate and your trust side. Now, that being said, there's always going to be experts in the space that are so familiar with QuickBooks that they'll never change. So we do have integration points so we can share certain aspects of the financials across. And we're building out still the corporate side. So right now we're very much so focused on the trust side and the bookkeeping and the expense management and those tools. But as we integrate it with QuickBooks in some scenarios, they can leverage more of that, in-app QuickBooks stuff. I mean, some people are doing payroll through QuickBooks. Some people are doing different things in QuickBooks that we just don't have yet. So there are integration points. That being said, in different models like co-hosting, we have people that are using our software standalone for co-hosting. Absolutely. Same for trust accounting when they don't own any of their own specific properties. So it really is going to come down to your specific model that you decide to scale with, but then also what specific reporting needs you need. And then also if you're, we have a few different models. You can either, work with one of our expert partners and they're going to do your accounting on a monthly basis for you, or you can bring your own accountant. And in that scenario, they might be so familiar with QuickBooks that they do want to save all the time from the payouts and the bookings and the bookkeeping perspective, but they don't want to have to navigate completely off of a QuickBooks. So we're taking a bit of an agnostic approach there, I guess. But in general, our goal is to be that standalone specific short-term rental trust accounting solution.
Okay, awesome. Thank you. All right, next question. In a trust model, do all payments from OTAs get commingled with all of your clients?
So it's again, definitely confirm with your own jurisdiction and where you are. But I would say most of the time, people come to us with just one operating account and one trust account. And all of the different owners, the money in that trust account is commingled. And then they use our tools to be able to know the different amounts for each owner. So There is a bit of a movement, and we do have the ability to do sub balances in our software. So if you did want to segment that down to a per owner level, you certainly can. Certain questions start to get asked there, and they're coming up more in the industry around like, okay, well, if you're doing it split between your different owners have their own trust account or their own segmented balance, and there's interest generated, who gets that interest? These types of things you should probably consider talking to an expert about. But in general, I'd say most people come to us with just one trust account, and all that money is going into one place for the guest booking deposits and the bookings of the guest. Your corporate funds and your expenses are going to go on the business side.
Awesome. Thank you. Okay, we've got one more question and we're just at the hour. Do you guys have time for one more question?
Yeah, I see the question. Yeah, I'll quickly answer it. I mean, we do use best-in-class encryption. Oh, sorry, the question's not up yet. Just around security.
The question is, yeah, what's cybersecurity like if bank accounts are linked to clearing?
Yeah, exactly. So we do have multi-factor authentication. We also use top-in-class encryption protocols like AES 256 and transport layer security. So in general, we are complying with the needs of a software for doing these types of integrations. And if we do any kind of third-party integrations, these are all really considered through that process. If you want to learn more about our cybersecurity, let's certainly talk about it. We have a bunch of stuff that we can share on the different things that we're using to be able to do what we do.
Awesome. Okay, good to know. All right. Well, I think that wraps up our questions. Thank you both again, Corey and Chris, for being here today. I think we've shared a lot of helpful information, answered some good questions. So yeah, hopefully everyone's learned something. Once again, for those who have asked in the chat, yes, the webinar is being recorded, and everyone who's registered will be receiving an email with the full webinar recording, as well as a blog post with links to clearing and Lake Oasis rentals. You can find out more about our speakers. Yeah, so expect that tomorrow. And any closing words? Or
I mean, thanks for your time. I know it's a pretty big day across the world, and especially in the States. So the fact that you can make it, and we really appreciate your time.
Yeah, absolutely. Thanks for having me, and this was fun.
All right. Well, thank you guys again, and have a great rest of your day, everyone. Bye.